First of all, I gotta show you how the group did in Ford puts today. Jeez Louise, that is insanity. Look at that. Patience. That's why I always tell them. Patience. That's right, Kite. Good shit, my man. That's what it's all about. That is what it's all about. Ford can keep burning, and then it went down even more after hours, so I'm jacked for tomorrow. But anyways, let's look at AMC and GME. I hear there's a lot of people at FOMOing out of the money calls tomorrow. Don't know who's in charge of this, but whoever is, let me just tell you, these puts right here, 136,000 down here at 0.5, that is paired with these 58,000 out here, and they're delta hedging you, and you can see how they're selling calls here, selling calls there, selling calls here, selling calls there, and then everyone bought into these 150s, 29.16. While it doesn't outweigh the open interest, you know, when you get down here, they do. You got a lot of volume right there, a lot of volume right here, a lot of volume right there. That's just retail making mistakes. You don't buy out of the money calls on triple witching Friday, and you know, if I end up being incorrect, then I'll be shocked. But if anything, it's like what happened to Bastille Day exactly 6 months ago from today. This is the exact same setup. Everyone lost a shit ton of money on the 16th of July. So just keep that in mind. Looking at the current strike though, which is what's important. 102.67. So the closest strike, we're in between that 1 and that 2 mark. So as you can see here, we have support at the $100 mark. So it's likely we will not see a drop below this, but if we do, these are your support points right here. 95, 90, and then you got stacked all the way down here to 40, and so on down to 0.5. That's how they keep the price hedged, or in other words, trading sideways. Delta hedging equals minimal movement in either direction to prevent their underlying positions from being altered too much. So anyways, I mean, you just got to learn from the mistakes in the past. If you're new to this, you know, I could be wrong, but again, everything points to the same thing happening on the 16th. For AMC, where did we finish today with AMC? 1807. So where are we at? At this current strike, we have calls, we have puts, we have resistance right there at 20, we have support right there at 20. Again, a lot of calls bought on the volume side, which again just feeds into their premium. I mean, you're paying the money when you buy these calls like this and they expire worthless. That money goes straight into the market makers' pockets. So hopefully I'm wrong, and hopefully, you know, I'll come out in the mid I'm wrong if I am, but it looks to me like a Bastille Day 2.0, but we'll see. Let's see what the calculator thinks. Watch, it's gonna be like fucking 90% or something for tomorrow. Let's see. Whoa, what was that? Okay, 37. Tomorrow, on the 21st, we have 41.20% chance above and a 58.80% chance below. That's what the calculator thinks for AMC. You know, think of it for what it's worth. It's probability. And then for GameStop, we have a 38.12% chance to close above where we did today and a 61.88% chance to close below. And if we wanted to find a floor, just throw in a 100 here. I doubt it's going to give us... Oh, wow. Okay, 35.4% to close below 100. What about, let's try 98. 18 below 98. Let's do 90. 0.11% chance to close below 90. So it's just a probability based on this model, very accurate model. And then AMC floor, let's put like 12. No, 0 below 12, that's good. 15. 0 below 15, that's good. 0 below 16. Oh, well, I didn't change the date. Hold on. 16. So you start to get your first little chance there at 16. So I wouldn't worry about it. It's going to trade sideways. It's going to build up. It's going to run again at some point. The IV is going to lower. I mean, let's look back at the IV real quick. That's another thing you got to look at when you're buying options. Okay, IV. Oh my God. Okay, there's no IV listed. Jesus Christ. Okay. Yeah, you don't want to buy this. Okay, because for an example, I'm going to show you why. We're going to go to the OCC's Black-Scholes calculator. It's provided by the OCC, the Options Clearing Corporation. And all you do to use this is you go to this website. I'll link it below if you want to try it out. You put style American, because the difference between European and American is that European can only exercise on expiration date. American can do that whenever, as long as it's in the money. So let's do GME option symbol. No, sorry, stock or index symbol. So what this is doing, it's telling us the closing price. We input the strike. So which strike do we want to buy? Let's make sure that was accurate though. Let's go here. What strike do we want to buy for this expiration tomorrow? Open, okay, I don't have the volume. Oh, yeah, it is right there. Okay, so 60 to 381, open interest down there. That's 102. Yeah, I mean, this right here is a clear giveaway. They're selling premium. And look, we can go in the Discord right now and look. We can go to our Discord bot right here. I can put OI GME just to get a consolidated picture. No, what the hell is that? OI GME. Then we get a nice consolidated view. So from a contrarian point of view, this is bullish. But from a non-contrarian point of view, this could be considered bearish. So it can go both ways. It just depends on the intentions of the market maker. The plays we're in right now, they don't have market makers, so you don't have to worry about this shit. So while on paper this could be either way, you just never know. Now the volume on the call side incentivizes them more to sell calls because there's more call volume. If there was more put volume, they would be incentivized more to sell puts. But that's a good ratio from volume to OI, but again, we do have those puts all the way down deep out of the money, which again, I think is for delta hedging purposes. And then you can see how the next week it flips dramatically. So, with a non-contrarian point of view, with a normal point of view, it looks to be bearish to bullish to bullish to bullish. So maybe we see a rebound here. Because remember, SLR, when that shit started in April of 2020, they got free leveraged, basically, to buy up risky assets. And then that shit ended on April of 2021, and GameStop and AMC were already bought up, and they ran. So just keep that in mind, because the repo took over SLR when that shit stopped in April. Because when did the repo go up? In April. Just keep that in mind. And if you want to visualize this to see what the premium is, flow sum, OI, and you can do this with any stock. Oh, no flow over 25K. Oh, that's because I didn't type in GME. Flow sum GME. So you can see here, buying calls at the ask typically is selling. Usually when it's in here, that's when it's bullish intentions. Buying or selling puts here would reflect at the bid. So there is some bid that, I mean, it looks to me like they're selling almost the equal amount of bid puts as they are call asks, which means likely going to trade sideways. But hey, anything can happen. I'm just trying to give you my point of view. So anyways, that's basically it. I think that's everything. Yep, I think we covered it. Unless you want to check the flow sum for AMC. It's the same shit, man. I mean, you got twice as many calls sold as puts. It looks like you got a lot of put volume here though, so that may help drag it one way. But we'll have to see. That's the thing. Look at this compared to like some of the things that we're looking at here. Look at that, what you just saw compared to, let's do this one. Oh look, no flow. You can't even chart it. Let's do something we maybe can. Giving free plays, by the way. Oh no. That's the thing. That's what you want though. That you want so little flow, because if I do the OI on what I just tried to show you, look at this shit. Look at that. Nothing. This is triple witching. Ignore this. Look at the week following. 4 to 95 on a contrarian point of view. Do you know like the strategy we have? Do you know how freaking bullish this is? 4 to 95, that is extremely bullish. And then you look at the stock itself and you go to the chart, right? And then you look at it and you can see there's a gap to fill on the upside right off the bat. The gaps happened on earnings. Yeah, it's a no-brainer. It's a no-brainer. I guarantee you Max Payne is a nice spread on this one. We got RSI. It's dead center, which is nice. I mean, it got dead center here and it moved up, so it's not unlikely. It's very possible. And some Amber Alert just went off. Sorry about that. Anyways, I think that's it. I think I covered everything. Did I miss anything? Anything at all? Nope. I think we're good. Yep, that's it. All right. Well, y'all have a good one.